Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Charu Chanana, market strategist from Saxo Markets. Today she's coming out of Sydney. Now, Charu, good afternoon.
Good afternoon, Brian. Good to be back.
Uh, Thank you, Charu. Now, before we get your insights, we're going to take a look at how crypto markets are performing, and then we'll take a look at how regional stock markets are performing. Now, Bitcoin has breached the 22,000 mark. It's at 22,311.2. It's up 2.75%. Ethereum is at 1,718.17. It's down 0.5%. Now, looking at regional stock markets, we've got the SGX, which is up 0.46%. Bursa Malaysia bucks the trend. It's down 0.79%. Shanghai is up 0.34%. The ASX All Ordinaries is up 0.64%. The Nikkei 225 is up 0.17%. The Hang Seng is up 0.29%. And rounding up the numbers, we've got the Kospi, which is up 2.53% after the holidays. Now, Charu, what's your view on market performance in the first half of the day? Obviously, Bursa Malaysia stands out as bucking the trend.
Yeah, but I see a lot of greens there, certainly. And I think that's one tone that we got from the overnight markets, where we saw gains in tech and, across most of the sectors as well. Some amount of positioning there ahead of US inflation data that is out today. But I think, it's a very fragile trend, in my opinion, and prone to reversal, I guess.
Now, so then how do investors position for the CPI data today, and what does this mean for the Fed? Because there's talk that the Fed's fund rate will really only start to see a pullback once it hits at least 4 or 4.5%, perhaps as early as next year.
Yeah, exactly. So in terms of the Fed's pricing, particularly if I look for the September meeting, I don't think this CPI print could change that we would get a 75 basis points rate hike this month. I mean, most of the Fed speakers have hinted that Fed has to stay aggressive to fight these inflationary pressures, and some of them have clearly called out a 75 basis points rate hike. But what it could change potentially is how high Fed rates could go and how long they could stay there. But again, I think you wouldn't probably take those decisions based on 1 month CPI prints. So I think if at all, the print is not in line with expectations, the focus just shift towards the FOMC meeting later in the year, where we see the new dot plot and where we take these decisions about the terminal rate and stuff. But in terms of markets, yeah, I think I do see some impacts potentially coming there, because until last week the equity sentiment was a little bit more bearish, but now we've seen a little bit of a rally in equities, and that means that that could be prone to reversal if we still see a higher than expected inflation print today. We've also seen the US dollar lose some momentum, right? And if we do see inflation sticking higher, we could again get a rally back in US dollar, especially at the cost of, say, euro dollar or the USD yen as well. So those are some things to watch out. But if we do actually see a weaker inflation print, then we have to go down into the details and see if the stickier components are, how they are behaving. So I wouldn't be really convinced that a lower inflation print means that we have reached a peak inflation stage. But I mean, a significant miss could still mean that this risk rally in equities could continue, or the USD could weaken further as well.
Now, Charu, the other thing that really weighs in on investors' minds now is energy prices. What should investors be expecting from the EU's energy proposal, and what do you think the impact will be on prices?
Wow, yeah, that's something of keen interest, since last week specifically, because this meeting was held between the EU energy ministers, the emergency meeting on Friday. However, I mean, we did not see much progress. They have come out with some proposals yesterday, I believe, something related to, rationing of demand. Well, I think that is the key solution that they have to go ahead with, at least for this particular winter. The other proposals in terms of, capping the prices of Russian oil, or in terms of, taking levies out of, oil and gas companies, or even revenue caps on some non-gas generators or something like that, it is hard to get a consensus on these issues. Some of the smaller European markets are certainly opposing these kind of measures, and that does mean that there will be a lot of debates, and those could be some potential catalysts, for the commodity prices in this week, particularly for oil and gas, as well as for the euro dollar. So yeah, I think we need to watch the situation, how that develops from here.
Okay, if we look at commodities in general beyond energy, gold and silver as well has been gaining overnight. It's retreated. What's the outlook for other commodities? A few weeks ago, we were talking about commodity super cycle. That rhetoric, however, has now changed.
Mm-hmm. So when you talk about precious metals, gold and silver particularly, silver saw big gains overnight. And gold has also been kind of staying in a range. It's both of these are actually fighting an inflation versus a high yield kind of a rhetoric. And of course, that's why they've been a little bit more range bound recently. But if you consider the fact that what Saxo's view is that inflation will particularly remain elevated. Okay, it may have peaked, it may come down a little bit from there, but it's not going to reach 2% levels in the near future. So it is going to remain elevated because of the structural issues that we are seeing. Climate change is affecting the supply of crops and agricultural output. Deglobalization and lack of investment in the energy space is impacting energy prices. So because of that, inflation will still remain elevated. And that means that, so gold and silver could certainly be still attractive, especially if yields top out. So if you do consider that we could see peak hawkishness in the next, say, 3 to 6 months, that means US yields could top out. And that will be the perfect scenario for outperformance in these precious metals. But other than that, like you rightly said, commodity super cycle, we still think not a super cycle. Perhaps the size of gains will not remain the same as what we've seen since November. It may slow down a little bit from here because we also still have demand concerns, from China's zero COVID lockdowns, but also because of, these fast tightening cycles, there are recession concerns around the world. So there are some of these demand concerns, but overall on the structural side, we still see supply issues in most of the commodities. And that means that, the bull run in commodities will likely continue.
Now, Charu, as always, thank you very much for coming on the show and thanks for your insights.
It was a pleasure. Thank you for having me.
Now, we've been speaking to Charu Chanana, market strategist at Saxo Markets, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our social media platforms as well as our website, www.biztech.asia. It will also be on our syndication partners, TV stations, radio stations, and websites. Thank you very much for tuning in.